Hi, I'm Steve Chater with TCT Property Management Services, and welcome to our Investor Insight series. Today we're going to be doing the April 2022 market update on what's going on in the Phoenix market. So, as you know, maybe you don't, but as you know, we are the resource for people building wealth with real estate. We wrote the book on creating the safe and secure strategy for building financial security, which is what we're all looking for. It's financial security, building it with real estate. So the question in April of 2022 is, what's going on in the market? Should I buy? Should I sell? This market has just been hot. It's been great for sellers. Should I wait? What's going on? And what about inflation? How is that going to affect my investment? So what I want to do is I want to take a look at the details of what's happening in our marketplace here and see the big picture by looking at the details. So let's just look at this first. Number one, Phoenix is the number 3 for drawing the most investor interest in data centers. Data centers are the wave of the future, the artificial intelligence, all of the things with Amazon and Apple and Microsoft and the outlook for our economy actually is really huge. We have been expanding into more and more of a technology-based economy. The other thing that's happening is that people are moving to Arizona, and they're moving in droves. Maricopa County leads the nation in population growth. Pinal County, Yavapai County, right around the edges of us, they're surging as well. And so we're just watching more and more people move in. And at the same time, we've not built enough houses. And so you can see here on this graph that we were building, well, let me just show you right here. So in September of 1999, we were building with about 40,000 permits. And here we are in 2022, and we've added millions of people to our population, but we have not added the housing that we need to have. In fact, if you look at the population growth here, we have grown since that time period. We've grown from 2 million to almost 5 million people here. And again, like I said, we have not built enough houses. Now, this is good news for the investor because we built a lot of apartment complexes, but families want to live in single family homes. And so good news, we have low supply. We have an increased demand that's continuing to flow. And so our market is strong. Now, one of the things that we use here at TCT is we use the Cromford Market Index, and that was created by a friend of mine who is a mathematician from Oxford University, and he used it to predict where is the best place for him to invest in the Phoenix market. So the Cromford Market Index, it measures that if a market is over 110, it's a seller's market. If it's between 90 and 110, it's considered a balanced market. And then below is a buyer's market. And in a buyer's market, prices decline. In a seller's market, prices go up. In a balanced market, they follow the rate of inflation. So where are we right now? Well, here's our market, April 23rd, and you can see I'm just going to point along here. This is what it looked like, the Cromford Market Index in 2020. Now, remember I said that about 100 plus or minus is a balanced market. In 2020, we got ourselves all the way up here to 420. Then in 2021, we went up to 525 times greater than a balanced market. Now, of course, it declined a little bit, came back up in 2022, and we're now seeing the Cromford Market Index decline. And what does it do? It projects the prices forward for the next 6 to 9 months. In other words, what direction is the market going based on the supply of homes and based on the demand? And so we're seeing that this is a strong market even as we continue. If we look at the appreciation of properties, and everybody knows that property values have been going up, typically we've been averaging in the Phoenix market a 4 to 10% appreciation rate, 4 to 10%. We are currently running right around 27%. We peaked last year at almost 40% appreciation rate. That's absolutely unsustainable. And we can see that as the Cromford Market Index comes down, the appreciation rate, the rate at which the value of your property grows, has been declining a little bit. But 2022, this is showing a 28% appreciation rate so far this year, 27, 28, better than the last 3 years. And now it's shifting. We don't expect that this current rate is going to continue. It can't. People can't afford to buy properties if their wages don't go up enough. So we expect it to moderate, but there's absolutely zero indication that the prices are going to decline. And so not too long ago, the end of last year, they did a home price expectation survey on what's going to happen. And it was a national panel of 100 economists that came together and said, what do we think is going to happen? Well, you can see here, 2022, they said, well, we'll probably see properties go up at 9%. And then in 2023, about 5%, and then 4%, and then 3.5%. In other words, we expect to see properties. Now, this is before we had all this inflation news about 7 and 8%. But here's something just to note. A $350,000 property would increase in value $1,200 per month. $1,200 per month if it was only appreciating at 4%. Now, we're expecting to do, quite frankly, about 3 to 4 times that rate. But that's putting over $1,000 a month, even conservatively, if we project out for the next 5 years. So as you can see, if somebody was to purchase a $360,000 home in January 2022, 5 years from now, it would be worth almost $100,000 more. Here's our numbers. No, those, by the way, that's national numbers here. Let me just show you what's happening here in Phoenix. As of April 15th, our pricing has already gone up 9.3%. And if we continued at that rate, it would be a 32% appreciation rate. Now, what does that mean? That means that it's likely that the average priced home in the Phoenix area is going to be $60,000 to $100,000 more next year. And that's if the trend moves down, not from the 28% we're at now, but moves down to the 15 to 20% appreciation rate. Our property values are continuing to go up. It looks like they're going to continue for the next 6 to 9 months. The Cromford Index has been predicting with accuracy a 6 to 9 month out, and we're seeing it go up. Now, why is it shifting? Well, we all know the interest rates have gone up, and we're over a 5% interest rate right now if you're going to go out and buy a home. However, if somebody was to use a 5-1 ARM, which means that the interest rate is fixed for 5 years, and then after that it adjusts, but it's controlled on how it adjusts every 1 year after that, you can be under 4% interest still on investment properties. So think about that. Under 4% interest on a property that's going to be worth $75,000, $100,000 more next year. That's more money than a lot of people make in a year, and it makes it easily affordable to handle. So here's, this is from Redfin, and this is to say Phoenix property, if you put 25% down, and now here's my point. My point is people are still buying. Why are they still buying? Well, because if you put 25% down and you get a 4% mortgage rate, which is a little higher than what I just showed you, the rent right now on average is $21.53. Okay, I just re-rented one of my properties that was renting for $1,800 a month. It is just re-rented at $2,300. The rents have been going up, but even with the higher interest rate, 4%, the rent's higher, and you got a $450 positive margin between your mortgage payment and the rent payment, which covers the expenses. In addition to that, every month you receive rent, the tenant's paying between $450 and $500 down every month on your mortgage. People are still buying properties in Phoenix. Now I said, let's talk about inflation. Look, inflation is not fun. It hurts. We've seen the gas and the oil prices and the price of food and everything has been going up. And the expectation is that it's not going to stop. So the stock market indicator says investors don't even, and this is just April 13th, don't think inflation has peaked. And so what do you do? Well, Here's from Globe Street, and this was just a few days ago, and it says, in inflationary environment, residential real estate may offer a more balanced and reliable option compared to commercial. Globe Street is about commercial property management, and what they're saying is, hey, you might better have single family homes. Investors benefit from models like single family rentals and multifamily rentals because the annual leases allow them to reflect the inflation. In other words, if inflation's going up, so does the rent. If inflation's going up, so do the interest rates. And so again, so does the rent. So what's happening is people that own the properties right now, it's a great time to be a landlord with the situations that are going on. And people that don't own property or want to acquire more, it's still a good time to acquire properties. In fact, if we look at this, the home builders right now are actually bypassing first-time home buyers. They're going right directly to the investors. Look at what this says. Large investors have amassed some $89 billion in capital to spend on buying or building new rental homes. And they've deployed only about a quarter of the money that they have. So we got almost $90 billion there, and it's not even all put in at this point. So what's happening? The money is there purchasing and building single family rental homes. Here's Fortune magazine. And so what is the date on this? April 22nd, a couple of days ago. Okay. Fannie Mae, a recession is likely in 2023. But the hot housing market should cushion the blow. Why? In light of lower interest rates, prices are expected to rise 15%, 14.9, between March 2022 and March 2023. Now, according to a recent forecast, that's what they said it was going to, which is down at Zillow, which is down from 18%, but nevertheless a 15% appreciation rate. So in other words, Cromford Index is saying we're not going to be appreciating at the same rate that we were before. But that doesn't mean that where prices is going down. It means that the rate of appreciation is slowing down, but there's no indication that prices are going to be going down. Now is the time to continue to hold, and it's still the time to acquire investment real estate. Why? Our rents have been going up. And it looks like we've hit the place where if we don't see more wage increases, we won't be able to afford the higher priced rents. The wage increases are starting to come because of the inflation. But nevertheless, we have a really strong positive cash flow. And many people are just buying for cash. But even if you have a mortgage, you can more than cover the mortgage in our current market. The median rent right now is $2,200 a month. And that's on a 1,600 square foot house, 1,700 square foot house. It's crazy. So here's how I want to close this. Number one, sales prices take at least 6 months to respond to any kind of shift. We're seeing a little bit of a shift coming from a 500 Cromford score. Remember, 100 is balanced. We're 5 times better than a balanced market and starting to shift down a little bit. And that takes time to make that shift. Interestingly, homeowners, investors that bought a property in the year 2000 and held on to it till 2019, they averaged a 4.5% appreciation rate every year for that 20-year period of time, every year, including going through the crash of 2008. So it's been a strong market for all of us that own real estate. Interestingly, I said a $350,000 property would appreciate it at $1,200 a month at 4%. We're predicting 3 to 4 times that for this next year. And then the prediction is that it's going to come down to be where it normally is, which is around 4 to 5% for it. And in Phoenix, we run between 4 and 10%. So we have inflation coming up in an inflationary market. The smart money holds on to real estate as the best hedge for inflation. So thanks for taking the time. This is April 2022. We want to keep you, our investors, up to date on what's going on in the market. It's a great time to be an investor in real estate. It's a great time to acquire more. And so thank you for being a part of TCT. We appreciate you. We are the resource for people building wealth with real estate. and we provide education, we provide seminars, we provide the information on what's going on in the market, and of course, we do property management too. So thanks for taking your time to watch.